Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 2nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data that we've gotten out today was ADP, non-farm payrolls, came in at 214,000, expected 185,000, so more jobs were filled than were expected. On to crude oil inventories. As you can see, I have a chart here of /CL, which is the futures for crude oil. Crude oil inventories came in at a massive build of 10.4 million barrels versus the expected 2.5 million barrels. That was by the EIA, which is Environment Information Administration. So they released that, and that was a pretty massive build, despite the fact that we're seeing crude oil rally. Came up and tested that $35 a barrel area that I've been talking so much about. Unless we can settle above that $35 a barrel area, I'm not going to be participating, but it is very close. Surprising that it is pushing that much higher. Also, gasoline was a drawdown of like 1.5 million barrels. Still have quite a lot of gasoline in inventory. I think it's year over year still plus 6.2% or something like that. So still a lot of gas and oil out there. The overall markets are starting to slide. We did test positive territory several times today. As you can see right now, NASDAQ down about 27 points after yesterday's massive rally. Looks like there's just going to be a little bit of a pause as some people take some profits going on there. Here you have /ES, which is the E-mini S&P. As you can see, up 4 points. They were flirting in positive territory not too long ago. Go on to the daily intraday chart of the E-mini S&Ps, kind of broken down. I tested this value area high and even yesterday's value area high earlier on this morning, late night when everybody was sleeping, but we have slowly sold off since then. Anyway, on to some trades that I've done, and got a lot to go over here. GPRO, as you guys know, if you guys have been watching many of these daily market commentaries, have known that I've been in this GPRO for quite some time. And what originally happened was I had on a February 28.15 strangle, and I originally sold that for $1.13. Well, as that market started coming off, I ended up rolling my 28 calls down to the 18 calls, tighten that up, talking about defending strategies when I was getting tested on my 15 puts on that original strangle. So I rolled down my calls because those 28 calls aren't worth anything, and collected another 70 cents for that. Then the market continued to go against me in this GPRO, so I rolled that GPRO out from February to March and had on the 28.18 strangle, okay? And then I had on the 18.15 strangle on that. So I rolled the February to the March, the 18.15 strangle, collected another 30 cents. Well, those 18 calls, as GPRO continued to slide, were worthless, so I just covered those for a penny. Then I just now rolled my March 15 puts out to the April 15 puts and collected another 46 cents. I just did that today. So all in all, I collected a total of $2.59 on this GPRO trade. Well, what does that mean? Well, as this market's continued to go, and I kept this dream alive, that $2.59, if you add that to where we are right now, that puts me at about $15.50. So I'm slightly in positive territory for this trade that has been nothing but a thorn in my side. So that is the power of rolling these strategies out. And I'm talking about this because we're doing a webinar on something similar to this. A strangle is very close to the iron condor, and with that defense and keeping this dream alive, I've been able to dig myself out of this hole of being having a losing position into being profitable. All right, so that's what we're going to be talking about on Friday, and how to do that and what strikes to pick. On to Twitter. Twitter, similar situation, where originally I had on the February 24 puts that I had originally sold, and with that, that was the January 21 puts, excuse me, and I collected 26 cents for that originally in January. Then I rolled those January to the Feb 1 21 puts, so I rolled the Jan to the weeklies and collected another 31 cents for that. Then as that decayed out and the market continued to sell off against me, I'm trying to just collect some extrinsic value for these, and then I rolled the Feb 1s to the Feb 2s and collected another 55 cents. Rolling out again, I went from the Feb 2s to the March and collected 35 cents. Now I just today rolled from March to the April for 33 cents. All right, and so I'm collecting extrinsic value. I'm talking extrinsic value, not intrinsic value, because the extrinsic value is what's decaying. That's where I'm getting my money for these rolls. So all in all, I've collected $1.86 for this. So that's putting me very close at it being at $18.50. That puts me at about 30 something. And so I'm just about 70 cents away from my break even on Twitter, because I've lowered that cost basis by rolling these calls out in time. So that's the very important takeaway from this, is keeping that dream alive and managing your losers and trying to turn those into winners by just rolling and keep collecting more premiums, lowering that basis. So ADM is one of these trades that I put on in the Iron Condor webinar, and we were talking about, if I put on a lot of occurrences, some of these are going to go against me. The probabilities are that 1.5 out of 5 were going to go against me. Well, ADM was the first one to test my break even, and originally I had put on the March 35.5, 34.5, 30, 31 Iron Condor. So originally I am short the 34.5 calls, long the 35.5 calls, short the 31 puts, and then long the 30 puts to define that risk, to create that Iron Condor. It's a strangle with the defined risk, in a sense. We talked about that in the webinar. And I had originally collected 22 cents for that strangle. 28 cents. Now by rolling these puts up, because the puts, 30 and the 31 puts, are basically worthless now. So because I've been gone up, the market traded when it was trading, trading 35. It's come off quite a bit now, but when the market rallied up and tested the 35 calls, the 35.5 calls. So it's 35.5 calls plus the 28 cents original credit. So when it was trading 35.78, that's when I rolled my puts up, and I rolled them from the 30-31 put spread up to the 35-34 put spread for the extra 22 cents. So I increased my break even. So now my total credit is 50 cents, right? 28 plus the 50 cents on this strategy. So I've increased my break even. I've also brought those puts up. So I've got closer, a very tight Iron Condor. So I'm looking for that to pin right somewhere between 35 and 35.5 to collect my entire 50 cents. I know that's a lot to go over in a quick daily market commentary like this. We're going to go over this in detail on Friday, how you work these trades and how you defend them, why I pick the strikes that I pick, and go into all the details that I can't really go into in a really quick 10-minute video. So check that out. You can go to protraderstrategies.com, sign up for that. And if you haven't seen the Iron Condor and the Iron Butterfly webinars, sign up for that, because this is a 3-part series. So we're going to be tying those previous 2 webinars together to culminate to this, how to defend your iron condor and your iron butterflies. That's all I got for you guys today, other than if you can't take that, take it easy.